But looking at this, it's a bit of fun, really. I mean, we've seen what sterling's been doing. Sterling went off and hit lows we hadn't seen for years a couple of months ago. That was a time when we saw a bit of a gold rally. And so, as a result, we see this, a record price for gold in pounds. What? 1,296 right. Or 1,286 pounds the ounce. OK, that's just a bit of fun. But gold has really been going down ever since, and we've been sideways a lot of the time. And we had a guest on earlier suggesting they were going to be sideways in 2020. That's the fundamentally bigger picture. What's your take?
No, we're still bullish on gold.
Well, you have to be. You sell the physical stuff, haven't you?
Yeah. But if you look at the fundamentals and the reasons why gold went up 15% this year, the fundamentals are there. And one word is uncertainty in terms of the geopolitics. You know, the trade war, I was here in June and we talked about it, but it took them 6 months to finalize the first phase of the deal. So it's still...
And we still haven't had it signed.
Yeah. And we have Brexit that hopefully will be sorted out, and we have other geopolitical uncertainties. At the same time, we have the negative yield bond, and we need to pay someone to keep your money, then you might as well buy real asset like gold and pay the storage fees. It's still less expensive than those bonds. And
so what you're saying is, it actually, with the fact that you have negative yields in so many places, you're actually getting a yield on gold.
You don't get a yield, but you pay, your cost is lower than going into this bond. So it becomes an attractive alternative. So you look at the uncertainties, you look at what's happening, you look at the investors trying to balance between rallying markets and the uncertainty. So it's still, the fundamentals out there, gold is still interesting, we're still going to see a growth in the appreciation in the price. So we're still bullish on gold.
Why do you think people are still drawn to gold? I mean, you talked a little bit more about the diversification side of things. Is there a sense that they're also pricing in a recession in the next year or two?
Exactly. We've been almost 11 years of growth, and it's a cycle. So people look at the figures and they say, okay, how long can this be going on before we have recession? And we know gold performs very well in times of stress in the market. So from investor point of view, this is an asset you put your money there, you hedge it, and you get ready for the worst to come, for recession or for even currency depreciation. So we saw not only pound, but we saw in the Indian rupee, we saw all-time highs this year in gold. So there is also the factor of the foreign exchange. So gold has few roles. It's diversifier in terms of when the markets go down. It also provides steady yields over time, on average 10% a year. So if you look at all these reasons, it's still attractive this year because, again, nothing changed. We had gold rallying 15% this year, almost 25%. We forget it, 25% since Q4 2018. And you look at the stock market, they didn't perform, they look very well if you look at it year to date. But if you go a step back to Q4 2018, the stock markets are less attractive than they seem year to date. So nothing really changed in the world. It's not like we're going into 2020 and everyone are happy. There's still fear of recession, there's still uncertainty, there's still negative yield bonds. So again, the fundamentals are there, and investors are concerned how to keep their money, how to protect their wealth, if you'd like.